Are you a business owner, whether it's full-time or a side hustle? You pour everything into your business, your time, your energy, your late nights, but when payday hits, it feels like half of what you earn has disappeared. Here's the thing. Most business owners are giving thousands back to the IRS every single year, not because you're careless, but because nobody ever has showed you how to write things off the right way. The best part is every dollar I'm about to show you how to save is completely legal and updated for 2025, straight from the IRS's rulebook. So let's get started on what the IRS actually says you can deduct. The IRS says you can deduct any expense that is both ordinary and necessary for your trade or your business. What does ordinary mean? Ordinary means it's common in your industry. Necessary means it's helpful and appropriate, even if it's not essential. That's straight from IRS publication 334. So let's get right in to the first of the top 10 deductions. Number one is home office deduction. If you use a space in your home regularly and exclusively for the business, you can deduct a portion of mortgage interest, rent, utilities, Wi-Fi, and repairs. There are two methods. The first is called the simplified method, which gives you $5 per square foot up to 300 square feet per year. The second is the actual expense method, and this is how it works. This is where you calculate what portion of your home is used for the business. For example, if your office is 200 square feet in a 2,000 square foot home, that's 10%. You can then deduct 10% of all qualified home expenses such as mortgage interest or rent, utilities, including things like electricity, internet, water, Wi-Fi, homeowners insurance, property taxes, and depreciation if you own the home. Repairs and maintenance also related to the office area. And the way you calculate this is you take the total allowable home expenses based on the list that I just shared, multiply that by the business use percentage, and in our example, it's 10%. This method typically yields a larger deduction than just the simplified method, which is $5 per square foot up to 300 square feet. But this method requires more detailed record keeping and receipts. I have a great worksheet to assist you in calculating your home office deduction. Please check in the description below. The second expense that you need to know about is vehicle expenses. There are also two methods for deducting your vehicle if you use it for the business. The first is the mileage method, where you deduct a standard mileage rate, which changes each and every year. For 2025, it's 70 cents per mile. The second is the actual method. The actual vehicle expense method lets you deduct the cost of operating your car for business use instead of using the IRS standard mileage rate. This includes expenses such as gas, oil, repairs, insurance, maintenance, lease payments, registration fees, and depreciation. To calculate it, you want to track all your vehicle expenses for the year and determine the percentage of business use. That's business miles divided by total miles driven for the year. Multiply total expenses by that business use percentage to find your deductible amount. For example, if your eligible car expenses total $8,000 and 70% of your driving is for your business, your deduction for the year is $5,600. The third expense I want you to know about is depreciation and Section 179. You have a big purchase? The tax code has your back. Section 179 lets you expense up to $2.5 million in equipment in 2025 with a phase out. Bonus depreciation allows a 100% write-off for qualifying property. Remember to follow the IRS order, Section 179, then bonus, then regular makers. Business meals is another big deduction. Meals with clients or while traveling are 50% deductible as long as they're not lavish, and you document who, when, and why. Keep those receipts. Number 5 is travel. Flights, hotels, taxis, and 50% of meals are deductible if the trip is primarily for business purposes. Combine business with personal, only the business portion counts. Here's the thing. These write-offs only work if you track them. Too many owners forget to separate personal and business, lose receipts, or realize that at tax time, they miss thousands. That's why I recommend Xero. Xero makes small business life so much easier. It automatically pulls in your bank feeds and reconciles transactions. sends invoices with automatic reminders so you stop chasing payments, gives you a real-time picture of your cash flow so you always know what's coming in and what's going out. And the best part is it works anywhere, anytime. So whether you're at your desk or on your phone, you're in control. If you've been thinking about trying Xero, there's a special deal through my link below. Check it out and free up your time for the things that actually grow your business. Please note, this video is sponsored by Xero, and I only partner with brands I actually use and trust. And Xero is one I recommend to all of my clients because it genuinely makes running a small business so much easier. So you've been on the fence, try Xero. The next tax deduction is rent and utilities. Are you renting an office or a retail space? Remember, that is fully deductible. Utilities like electricity and water are also fully deductible. Remember, if you're using a home office or a portion of your home for the business, refer back to deduction number 1. The next one is wages and contractor expenses. Do you have employee salaries, bonuses, benefits to those employees? All deductible. Same for contractors. Just remember, if you pay someone $600 or more this year, you must issue a 1099 NEC. But for next year, starting in 2026, the payment threshold to issue a 1099 goes up to $2,000 per recipient per calendar year. The next expense is supplies and office expenses. Paper, pens, cleaning materials. Deduct in the year you buy them. Bigger assets, remember to depreciate. Number 9 is insurance. Do you have liability insurance, property insurance, malpractice insurance, workers' comp, all deductible if you're self-employed. Your health insurance premiums may also be deductible under Section 162. The last one is other deductions. Interest on business loans, professional fees, advertising, training, bank fees. Just don't try to deduct fines, penalties, or personal expenses. Those are non-deductible. The IRS generally requires you to keep records for at least 3 years after filing. But for assets, keep them as long as you own them, plus 3 years after you dispose of them. Good records equals bigger deductions, plus stronger audit defense. Make sure to use Xero to stay organized. And if you want step-by-step version where you actually implement these strategies in your business, join my Business Owner Bootcamp. It's 5 private one-on-one sessions with me, and I walk you through deductions, retirement plans, and a tax saving system for you that's personalized. Spots are limited, so check out the link in the description below. That's the rundown of the top small business deductions for 2025 and beyond. If this helped you, remember to share this video with someone you know that owns a business. Also, please drop a comment with what is the biggest deduction you didn't know about. I read every single comment. And remember, the IRS wants you to claim legitimate deductions. It's how the code is written. Stop leaving money on the table and start keeping more of what you earn. Till next time, bye.